Hey everyone, welcome back to Corporate Decoder. Today we're looking at a filing that is less about explosive growth and more about, well, making a debt disappear. Get ready because we're about to unravel how Steel Dynamics Incorporated is cleaning house and what it might mean for their future. Before we dive in, if you like getting these easy toll, understand breakdowns of complex financial documents, make sure you are subscribed. And we've got a fantastic community discussing these topics over on Discord, linked in the description below. Alright, so what we have here is what is called a Form 8. Think of this as a company's way of telling the public when something important happens that isn't part of their regular reporting schedule. It is like a special bulletin, and for Steel Dynamics Incorporated, the big news in this bulletin is all about their debt. This company, Steel Dynamics Incorporated, is a pretty big player in the steel industry. They make steel products, and like many large corporations, they sometimes borrow money to fund their operations or big projects. In this filing, they are announcing they have paid off a significant chunk of debt. Specifically, they've redeemed and repaid all of their outstanding 5.000% senior notes due 2026. Now, what does that mean in plain English? Imagine you borrowed money. Those senior notes were basically an IOU, a loan that they promised to pay back with interest. The 5.000% tells you the interest rate, and due 2026 means they originally planned to pay it all back by the year 2026. But they've decided to pay it back much sooner, on the 21st of December, 2025. And this wasn't a small loan, we're talking about a principal amount of $400 million. That is a massive sum of money. They paid back the full $400 million, plus any interest that had accumulated up to that specific repayment date. This debt was originally established back in 2016 through a legal document called an indenture. This is a pretty standard thing for big company debts. It lays out all the promises and rules about the loan. The really important part here is that by fully paying off the debt and returning the debt certificates for cancellation, Steel Dynamics has officially ended their obligations under that agreement. They are completely free and clear from this specific loan. Now, why would a company do this? There are a few key reasons. First, by paying off debt early, they immediately stop paying interest on it. Saving money on interest is always a good thing for a company's bottom line. Second, it reduces their overall debt burden. A lower debt load generally makes a company look financially healthier to investors and lenders. It can improve their credit rating and make it easier to borrow money in the future if they need it. And third, sometimes companies have extra cash on hand, and retiring debt can be a good use of that cash if the debt's interest rate is higher than what they could earn elsewhere. This move suggests Steel Dynamics is in a strong financial position. They have enough cash or access to financing to pay off a $400 million debt well ahead of schedule. This is a sign of financial discipline and confidence in their ability to manage their liabilities. Looking at their stock, it is traded under the symbol STLDEL on the Nasdaq Global Select Market. This means investors can buy and sell shares of the company on a major stock exchange. And signing off on this report, we see Teresa E. Wagler as the Executive Vice President and Chief Financial Officer. This is the person in charge of the company's money, giving the official word on this debt repayment. So, what is the big picture here? Steel Dynamics is making a strategic move to strengthen its financial foundation by eliminating a significant debt obligation. This is generally seen as a positive signal. It means fewer interest payments, a healthier balance sheet, and potentially more flexibility for future growth or investments. It shows they are managing their financial commitments proactively. In my opinion, this action points to a company that is confident in its current operations and its future earnings potential. They are not just operating day to day, they are actively working to optimize their financial structure. The risk of not paying this debt on time is now eliminated, and the saved interest costs can be reinvested back into the business, potentially for expansion, research, or returning value to shareholders. While we don't have the full financial statements in this particular filing, this debt repayment is a strong indicator of sound financial management. Alright, that is our breakdown of this Steel Dynamics Incorporated filing. What is your take on this debt repayment and what it signals for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.